Hey everybody, I hope everyone is doing well and had a good day. In this video, I will very briefly review the Emini 5-minute chart for Wednesday, August 27th, 2025. As we can see, we had a bull trend going into the day, and it was kind of climactic toward the end of yesterday. 71, big breakout bar, deep pullback, another buy climax into the close, another sharp reversal attempt on the gap down. But if we looked at the gap down on the extended, the Globex chart, we would see that it might be an expanding triangle bull flag. It might be a wedge bull flag, depending on how you look at it. Clearly, 3 pushes down. The range is expanding, lower lows, and from here, higher highs. So it's possible that this is simply a sell vacuum testing support, and it's a bear breakout attempt of a bear channel line, which has a 75% failure rate. So typically the market's going to reverse here within about 5 bars and then go back up and test the resistance, the opposite side. So the bear trend line, or in this case the bull channel line, if it is in fact an expanding triangle. So going into the day, the expectation, 3 legs down, breakout attempt of a bear channel, there's probably going to be support and a rally. And that's what we got right on the open of the day. We had a bull trend from the open. And that goes along nicely with the close of the prior day, tight bull channel, reversal attempt. But we saw what happened the last time there was a reversal attempt. We found support and we rallied sharply. So gap down, you can think about it as a bear breakout, but the market reversed up strongly. 3-bar micro channel on the open, the odds are there are buyers below, and a second leg up is likely. Whenever the market's trending and there's an opposite breakout bar, usually you can buy the close of that bar, at least for a scalp. And whenever there's in this case, a bull trend, you can pretty much buy any bull breakout bar. So bar 5, it's a bull breakout bar. You can buy that bar, buy in the buy zone of the bar. 8, 9, 10, these are all breakout bars you can buy. 13, another breakout bar you can buy. But at this point, we're going sideways for 2 or 3 bars far above the moving average. So the market may pull back deeper because the bull's buying up here. If you're buying far above the moving average, your premise is you're buying momentum. And you want to be buying price action that is far above bullishness if you're paying far above the average price. But once we start going sideways, 3 bars overlapping like this, more bars going sideways, more and more bulls will reduce their position size and look to buy lower. And that causes a sell vacuum. But now we're testing support below the low of the strong bull bar 10. The downside's limited. This looks like a minor reversal. For a major reversal, we need a significant break of a trend line and then test some highs. But here's a bull trend line. We don't have a significant break of the trend line. We do not have consecutive big strong bear bars. So all of this is probably a minor reversal, which in other words is a bull flag. So okay to buy here. 2 legs down against a tight bull channel. So we're probably going to test the highs. Another bull breakout bar in the direction of the trend. Okay to buy here, expecting a test of the highs at a minimum. Weak reversal attempt 18, 19, probably buyers below. But now we're channeling, so there's probably resistance above. The upside here is probably limited. Another reversal after 3 pushes up, but the channel is tight, so the downside here is probably limited. Breaking out to a new high, but again, channeling up, so resistance expected. 24, strong enough bear bar for a second leg. There's room for a scalp to the EMA, so we may go a little lower, but I suspect there's support below. Trap traders here. There's an open gap from the 17 bull breakout bar, probably support here, but at the low of 17 at the moving average, so layers of support. And then we're trying to get out to a new high, break out to a new high, but again, it's the channel phase. We're getting 1, 2, 3, maybe 4 legs up. So 28, not a great bull breakout bar to buy at this point. The market is clearly, we've had a spike, pullback, and clearly in a channel phase now. And the channel is expected to evolve into a trading range. So we could easily come back and test the low of 16, the start of the channel, which often becomes the bottom of a trading range. It's probably support down here. But if you're buying here, you might be buying high in a developing trading range. So okay to exit below 29 and okay to take a stop order sell below 29. The bar is small, so you get good risk reward, but the probability is not yet high. Bear breakout 33, but tight trading range and just above the EMA. Better to wait for follow through, which we get on 34, closing below the moving average. So certainly okay to exit longs on the close or below 34, and also okay to sell, because if this is developing into a trading range, like I said, we can come back and test the low of 16. 35, sell vacuum. Good looking bear breakout bar, but bad context. It's testing support, so not ideal for selling, but strong enough breakout that will probably get a second leg down. It also might be 3 pushes down, so a wedge double bottom is what a bull sees. And then no follow through selling on 36. The market did not break below all the bars to the left, but still strong enough breakout for a second leg down. So 36, probably a minor reversal. So sellers above, second leg down, likely, and that's what we got on 37. 38, sellers above, bears got their minimum second leg, but now we have 2 legs down, might be 3 pushes, and we're testing support after a tight bull channel. So this entire rally is a breakout on a higher time frame. All of this is a minor reversal, and we still may need to test the highs before there's a major reversal. Strong breakout bar 40. Probably okay to buy the close, but you really want to see momentum because the bar is forcing you to trade in the midpoint or just above the midpoint of the range. And follow through 41. So breakout follow through. Traders, because it's a trading range, they'll probably buy a pullback, maybe at the 50% pullback, maybe the breakout point, 37 high, rather than buying near the high range. 42. After 40, 41, 42 is probably a minor reversal, so okay to buy below 41. And these other magnets, like I mentioned, the 50% pullback, the breakout point, which is where 43 tested and reversed up. Now there's probably sellers at a new high because we've had a breakout, pullback, now we're in a channel phase. So sellers above 42 on 45, but now we have a 3-bar micro channel, another signal, 43 through 45. So again, probably buyers at the midpoint rather than at the highs where there's resistance. The market again tests that midpoint, probably sellers above again. Selling pressure here is weak. Bear bar, bad follow through, bear bar, bad follow through, doji bar. So yes, it might be 3 pushes up, but not ideal for selling. Probably buyers below 49 or buy the close because it's a bad sell signal. And you can see the tick gap. Another bad sell signal, 51. Bears, they see a double top and a wedge. 1, 2, 3. But again, weak selling pressure through here. So tight enough channel, spike in channel, but the channel's tight, probably needs another leg up. So buyers below 51, buyers below 55. It's a good looking bear bar, but heavily overlapping the prior bar, and the channel is tight. Like I said, we've got open gaps, open gap here, open gap here. So 55, another buy the close or buy below bar. And then 57, bull breakout of a bull channel. So profit taking bar for the bulls. It's kind of a gift bar. If you're long, you probably take profits on the close of 57 or somewhere up here because you expect a breakout of a bull breakout of a bull channel to fail, reverse within 5 bars, and test the trend line. And that's ultimately what we got here. Micro double top, up, down, probably sellers above. as we found here, we've got 2, 3, 4 consecutive bear bars, probably sell the close. At a minimum, we're probably going to the low of 57. We're getting close to that trend line. And if we look at the day as a whole, it might be a broad bull channel. So if that's the case, maybe the trend line's all the way somewhere down here. So 69 sell vacuum, but testing support, testing the broad bull channel trend line, also testing the bad buy signal, 39, where there's a gap. So not ideal for selling down here. Big bear bar, but testing support similar to 35. And then strong reversal up, 70, probably okay to buy the close and buy a pullback. It's a climactic reversal at support. Overall, the market's trending with higher lows and higher highs. But it's certainly not a strong bull trend at this point. It's either broad bull channel or a trading range. So there's also sellers at the highs. So another micro channel for the bulls, but as we get closer to the highs, bar 74, bigger than the prior bars, might be okay to sell the close to take profits. Upside probably limited. 75 testing that stop order trap above 63. So now we're back in the sell zone. So big down, big up. It's a trading range. Now we're in the sell zone, so better to look to sell up here. Up, down, micro double top, outside down 77. In theory, probably okay to sell because it's a second reversal at resistance in a broad channel or a trading range. The sell-off down to 69 is probably going to get a second leg, but it's too late in the day to really take any trades. And then we went outside down 78, back down to the midpoint or lower third of the range. So broad bull channel day today. And that's going to be it for today's review. Thanks everybody for watching, and I hope everybody has a good night.